Avinnash Gorakssakar is now joining us. Avinnash, good afternoon. Such event, the panic that we had in the morning, should be used for long-term buying?
I think, Pankaj, clearly yes, because if you see the event, I think, the announcement was definitely a surprise. I think yesterday everybody was rejoicing that possibly, Britain will remain in the euro, but today morning I think trends showed otherwise. But I think overall, if you see the recovery in the markets, and I think the broad consensus in the market is that ahead of the expiry, maybe on coming Thursday, I think the market should settle down. There could be some little bit of volatility ahead of the FNO expiry for this month. But overall, I would suggest that this is a good time to actually pick up quality stocks and, which have got a larger domestic base, because obviously the euro, event has happened, and I think this exit will obviously mean little negative for companies which have got a large exposure on UK as a potential market. Classic examples are typically Tata Motors or maybe an HCL Tech or a Motherson Sumi, which have got large exposures to UK as well as Europe. So I would say that this could be a good opportunity to actually play the local domestic story, and I think we would be looking at now the GST in the oncoming monsoon session, the monsoon's progress. So all these things I think are going to get more limelight as the FNO expiry gets over, and I think it would be back to business over the next say 2 to 3 days.
Right, and something of this sort happening, it may be impacting the markets because of the positioning right now, but overall it doesn't really impact the earnings that much, right?
No, it doesn't impact the earnings, especially for companies which are strongly domestic focused. For companies which have got large export markets, especially pertaining to Europe or UK, could possibly find that a weaker pound could possibly hurt their export earnings and possibly hurt their cash flows for the time being. But I think there also one needs to get into little more specifics. I think what commentary comes out from most of the companies, plus what happens for most of the bigger economies which actually export to UK. The only fear is, Pankaj, in the short term, possibly, the bigger economies which export to UK, if they announce some sort of currency devaluation, it could possibly be a kind of negative, a short-term negative for the markets.
Right, it may take a readjustment, but that doesn't mean the end, right? Markets will adjust to it quite soon.
No, it will adjust. Definitely, core earnings are definitely going to grow. And I think all said and done, India is a large domestic market. So I think very few companies are, positioned where the entire business actually comes from UK or Europe. So to that extent, I think there might be some hits, in specific stocks. But overall, I think one should definitely use these dips to actually build a good portfolio. I think this kind of fall was anticipated for a very long time. And I think this has come in the form of a British exit. So which is, I think, we should be viewed as a blessing in disguise.
Right. How would you expect Tata Motors to do? I mean, it went down 12%. It is the top loser right now. They will also adjust. They have new plants coming in. EU, of course, is one of the big markets for them. But they will also adjust to these changes?
No, I think they will. After the initial Chinese setback, which, occurred initially when Chinese demand actually went down significantly, there was a fear that possibly Chinese demand was the only trigger available for Tata Motors as far as the JLR product was concerned. But I think they did a little bit of homework, and they did manage to come out of this. So obviously this is also another challenge. My sense is at least the next couple of quarters, Pankaj, would be challenging, because this was a very important market, the EU, as well as the UK market for JLR. And I think volumes in the past 2 quarters were actually very robust. So to that extent, it may not actually hurt their earnings immediately, but sentimentally it's going to, put down the stock for some time.
Right. Would you be a buyer right now at 450, or you would wait for a further correction?
No, I think clearly, around levels of around 425, 430, I would definitely buy. In fact, my sense is, that if you take out this piece from the overall piece, I think the domestic business, fortunately, this year has turned around, has started making money. So I think the domestic business will obviously be a big trigger. And I think there are other markets where JLR is going to obviously be sold. So I think probably if you can take 1 or 2 quarters out, I think definitely this can be a good risk-reward opportunity, provided the time window is slightly longer.
Right. As far as, some of these high beta names which are correcting, should that be used as a buying opportunity? A lot of interest off late into the high beta name which has started to correct. So we had, something like a Vedanta, which is down about 8%. Rajesh Exports is down. Hindalco is down. Reliance Infra is down. Some of these companies have not got anything to do with what's happening with currencies.
No, I think my guess is, I think, internationally, I think, these companies are, there is definitely some correlation in terms of metals or in terms of, companies like Rajaj Exports, which actually exports to a lot of countries, including, the UK as well as the European kind of bloc. So my sense is these could be temporary hiccups. I don't think it's going to impact the business significantly over the longer term. Maybe for maybe a quarter or so, there could be some setback. But I think overall, if you ask me, I mean, clearly, most of the businesses have a domestic base already. So clearly, I think the export piece could get a small setback. But overall, I think, today's moment is actually completely, undeniably very difficult to predict. But over the next, say, a week or two, I think things will stabilize and, all the dust will settle down.
Right. As far as some of the other names like which are gaining today right now, irrespective of the market move. So Natco Pharma is up 5.5. Muthoot is doing well. PNB is up about 2.5. Any word on PNB, Avinash? Yesterday we had Nomura upgrading this name. Generally, PNB is a very high risk, high beta play. 21 million shares traded today, 101. Do you think one should buy into this?
No, I think my guess would be that, I think within the PSU banking space, I think, Pankaj, I would be more positive on SBI and Bank of Baroda. I think PNB also definitely qualifies as a large PSU bank, but I think looking at the kind of asset quality which they showed in the fourth quarter, it would be prudent to actually wait for at least one more quarter. I think in case of SBI or Bank of Baroda, these are banks which clearly spelt out that possibly asset quality stress may not be as high as what they provided. So my guess is, I think one has to be a little cautious here, because clearly even as of now the kind of capital requirement for these banks is pretty huge. So probably PNB can wait. You can probably look at Bank of Baroda or SBI.
Right. How would you look at, say something like a PNB in terms of numbers from here on? Numbers would still be worse off or, still look weak, but the stock can do well. I mean, there is a franchise value also associated with PNB.
No, I think if you have a 12 to 18 month kind of horizon, Pankaj, I think all the PSU banks, including PNB, trade at very extremely attractive price to book kind of valuations. And I think, these banks are definitely not going to run out of business. Asset quality problems, started about 3 to 4 quarters back. The RBI also initiated some fresh kind of norms. So my sense is, I know, somebody who's wanting to build a kind of portfolio of PSU banks should take a longer time window. And in that perspective, I think just betting on PNB probably would not be the right strategy. You could probably look at bigger banks, where the the distribution network is very large, something like an SBI or maybe a Bank of Baroda or maybe even PNB, or for that reason even a smaller bank like Allahabad Bank. So
can somebody go and buy a PSU mutual fund or a PSU ETF?
I would prefer that, in this kind of market when the stocks itself are battered so badly, Pankaj, it's better to bet on a PSU bank, because obviously...
No, it just gives you a basket, as in,
It gives you a basket, but I think, obviously when the returns do come, the returns are obviously going to be indexed and relatively lesser than what a stock could possibly give you. Somebody who doesn't have the risk appetite can probably try a PSU, fund which only has a basket of PSU stocks.
Right. Or, you can look at buying a basket of banks, PSU banks, and say if you would advise that, what are the top 4-5 banks that you would look at?
I think when I say banks, I would probably like to look at both the PSU as well as the private sector banks. I think, clearly from the PSU banks, the larger banks like Bank of Baroda or maybe typically a SBI. From the smaller banks, something like a Federal Bank or maybe a Karnataka Bank. More importantly, from the private sector bank, some banks which have got a large CASA, a good distribution network, something like a Kotak or a IndusInd Bank, or maybe even a Yes Bank, even at slight dips, because these are banks which are definitely much better off than an Axis or an ICICI Bank. So I would prefer to avoid Axis and ICICI Bank, but provided, the other 3 private sector banks can be included. So clearly over the next 12-15 months, hopefully the economy picks up. You could probably get a good beta and a good risk reward, by having a mix of such banks.
How would you look at technology in such an environment? See, the currency, the GBP may depreciate from here on. But do you think that people will change their vendors? They will start to get a lot of competition? Or, it could actually be a blessing in disguise for margins for some of these companies?
No, I think it's still difficult to say, because my sense is, I think finally margins definitely are one aspect of the business, but even the technical capabilities of the vendor is very important. I don't presume that pricing alone would actually take away business from the vendor. So, companies like HCL Tech or maybe Tech Mahindra or TCS, these are large companies and which have got a very large exposure to the UK as well as to the European kind of market. So, my sense is it would be a mix of new offerings as well as competitive kind of pricing. And I think in the near term, these challenges will remain, because currently we really don't know where the pound would settle down, and clearly once UK becomes an independent country, how the currency would behave. But overall, I would say that business is definitely not going to go out. It's obviously going to come on some revised terms and conditions.
Right, and overall these IT companies, they may actually see a better pricing coming in.
See, I think my guess is, the European market was always considered to be a second best market after US, because the US had already seen a lot of challenges in terms of delay in IT spending for a long time, considering the slowdown in the economy. I think Europe was always considered to be a bright spot, and I think many companies actually made an entry into that market after looking at the kind of scenario what was emerging in the US in the last, say, 1 or 2 years. So I would say something like a TCS or maybe a HCL Technologies. These are companies which I would presume would definitely grow, and I think in terms of the opportunity, I don't think an event like this is going to be like an end of the road. So business will continue to grow, but I think you have to take a medium to long term view.
Right. As far as something like a Max Life is concerned, now it's up about 3% today as well. It's been merged into HDFC Life. Of course, it's not got any impact of any major currencies coming in. How would you look at that name after the merger?
No, I think, Pankaj, we don't know what is the distribution ratio. I think in all probability, if HDFC takes it over, the ratio is obviously going to be to the benefit of HDFC. But as a standalone entity, I think there's great risk reward provided. Obviously the investor holds on to this share for the next, say, 18 to 24 months, because insurance is a long-term business, and they are one of the best insurance standalone players, in a pure insurance play which is available after the demerger of Max, which was done few quarters back. So my sense is, even at the current level, if somebody enters, I think one has to then look at the distribution ratio, because when you buy one share of Max Financial, finally what shares you get of HDFC Standard Life is going to be the key issue. So at that point of time, there could be some readjustment to the price.
But both the promoters are quite smart. They are known to the markets. Probably assuming if the deal is fair or at the current market valuation, you think the synergy benefits could be very high for this insurance play?
No, it could be very beneficial for the insurance play on a macro level, on a bigger scale. But when I talk about institutional shareholders or I talk about retail shareholders, I think what matters, Pankaj, is what is the distribution ratio, because finally at the end of the day, the balance sheet may look big, the profit may look better, or maybe the market share may expand. But from a value perspective, whenever a merger happens, I think the merger has to be beneficial for the small as well as the large shareholders, and I think that is very key. Once that happens, I think you could probably see some further re-rating in Max Financial.
Right. So as of now, you would not be tempted to buy?
No, I would prefer to wait, because, in case the ratio is not favorable to Max, you'll probably find that, this company will get merged into an unlisted company. Of course, HDFC Standard Life has also mentioned that they want to go public sometime. But probably, it becomes clearly like an unlisted category. So I would prefer to wait and watch.
Right. How would you look at Titan at 390? Of course, by all means, it is expensive. Considering the numbers in Q4 were particularly bad, we saw EPS downgrades, it's definitely expensive. But if gold prices go up the way they are, you think that that becomes an interesting play?
No, I think, they operate in the premium category, and my guess is, the overall demand in that space has actually slowed down. Management for the first time has mentioned that it is not working capital or the gold price, but the local demand which is actually, gone down, it's been muted. So I think hopefully if the demand scenario changes, then Titan is in a kind of a spot where they can actually have some premium pricing for their products, considering the kind of brand they enjoy. But I would prefer to wait for at least 1 or 2 quarters. The kind of management commentary which was spelt out after the 4th quarter clearly shows that FY17 is going to be a tough year. So it's better to wait and watch for at least 1 or 2 quarters, because clearly gold financing companies, something like a Muthoot or a Manappuram, have shown excellent numbers. But a player like Titan is not into that kind of business. They actually are in the jewelry business. So there has been some letdown in demand. So prefer to wait and watch.
Right. You would prefer to wait and watch. And plus valuations are also not leaving a lot of upside.
Yeah, I think if you look at it from a valuation perspective also, I think one doesn't get the kind of comfort if one takes a 1 year kind of forward multiple and takes a return perspective. So I would prefer to wait. I think, most of these stocks are held by strong hands, both the FIs as well as the institutions. So very little, I think sell-off or maybe very little large institutional buyers are yet there on the table. So that's why you see these valuations, still pretty stretched.
Right. Avinash, thank you so much for taking out time for us. Hope you have a great day.